Hello, it's Monday, the 31st of March, 2008. This is Brian Shannon from Alpha Trends, and let's see what we have here today. The market finished with a gain. S&P 500 finished up 37 cents on the spiders, or about 0.3%. And you can see here that this market, we're still below this declining 50-day moving average, and while it is below there, we again want to remain cautious and look at this market as guilty till proven innocent. When we look at the shorter term time frame, for instance, the 30-minute time frame, you see last week we looked like maybe we're going to hold above that 134.50 to 135 level, but it broke down, and we've been seeing this pattern of lower highs and lower lows established. I think that now if the market can get back above this level, 132.75 or so, then that makes it a little bit more neutral in the short term. But again, with a declining 5-day moving average, you want to be very careful about any potential long side trades. Really, for this market to have much follow through on the upside, it's going to have to get back above that 134.5, 135 level again. So a lot of mixed signals in here. You can see, though, the market may be starting to stabilize a little bit in here after last week's sell-off, where we saw this real nice pattern of lower highs and lower lows. We see now what looks like maybe a lower low right in here near about 131.70, and today's lows near 131 or so. So realistically, what does it tell us about this market? That the primary trend is still intact in the downward direction, and we're seeing a little bit of stabilization of the short-term trend after last week's sell-off. The XLF, this is the financial spiders. These guys were up 21 cents today, or 0.85%, but nothing bullish looking on this chart at all. Best thing you can say is that it's been pulling back on light volume, but again, would you rather lose 10% on light volume or heavy volume? It's irrelevant. The only thing, again, that pays is price. This 50-day moving average continues to decline, and we've got this market trapped below this downtrend line as well. So last week it was prudent to trim your long positions if you had some on that powerful rally as it approached that declining 50-day moving average, and we're now back into this more maybe searching for some sideways consolidation in here. You can see that really there's not much evidence of it on the shorter term time frames. Looking at this 30-minute time frame, is just not there. On the 10-minute time frame, you could say that this looks like an important level right in here at about this 25.30 or so. As we know, last week the 26.20. That's really the key level this market's going to have to get above for any type of rally to sustain itself. We do have a declining 5-day moving average, so be very suspicious of rallies in here. And it looks like maybe we get a break of this this high here. Tomorrow it might bring us just to the declining 5-day moving average. So nothing to get excited about on the long side. Looks like just some short-term neutralization, and in a longer-term trend that maybe is trying to search for some support in here as well, but within the context of a much bigger decline. So no reason to be excited in here. I found today to be a very boring day. The NASDAQ 100, if you look in here, this market holds up probably the best right now, because we see that we've got this 43.50 level that had been acting as resistance, and the market is held above there very nicely. We see also a rising 10-day moving average that the market is holding above, but we've got that declining 50-day moving average, and that tells you want to be very suspicious in here. In order for us to have any faith, in here, this is with the 30-minute time frame, you can see the importance of this 43.50 a little bit more clearly when you drill down to the shorter term time frames. That level seems to be tested successfully for now. We do have a declining 5-day moving average, and from a 10-minute time frame, I think that you want to see the market at least get above and hold above the 44 level, but that would also have to coincide with it getting above this 5-day moving average as well. So still a lot of work needs to be done in this market. It's kind of the same situation where it looks like it's trying to stabilize in here, and 44.50 above that level, then maybe this could turn into another leg higher. You have to be aware of all potential situations that as they unfold, but with a declining 50-day moving average, be suspicious of anything that looks really tempting to the long side. And if you do trade it, then trade it with smaller share size because the risks are higher. The Russell 2000 This 68.50 to 69 level is what we've been focused on really as the key level recently in here. You can see the market close at 68.45, so it's basically right in that area. Declining 5-day moving average though doesn't suggest that probably it means that probably we need another couple day or two in here to kind of build some energy, and then maybe if it can retake probably 69.5. If we can get back above that level, then I think the longs can breathe a little bit easier, and there might be some opportunities for some upside scalps.